Markets slipped in the latest session as capital fled tech and rotated heavily into consumer defensive, driving the sector up 2%. Direxion Semi Bear 3X ETF jumped 7.9% with unavailable moat data. Escalating geopolitical friction and tightening hardware trade restrictions continue to choke global semiconductor supply chains. These physical trade barriers create structural headwinds across chip manufacturing, fueling momentum for inverse leveraged exposure. Our Denver Stock Lab teardown reveals how hardware policy decisions dictate this fund's underlying trajectory. SOXS surged 7.91% to reach $50.75. This daily move highlights its engineered function as a 3x inverse levered fund tracking the SMH index. Multi-day holding period risk remains massive because the daily reset mechanism causes severe structural volatility decay. The fund gains when its target underlying semiconductor assets collapse. NVIDIA carries a dominant 20.8% allocation within the underlying index. Any pressure on high-margin AI graphics processor shipments immediately accelerates positive daily returns for this inverse vehicle. Taiwan's semiconductor manufacturing company represents 9.6% of the target basket. Leading-edge foundry transitions to multi-die assemblies at 2-nanometer nodes increase execution risk across the supply chain. Broadcom commands a 6.6% weighting in the underlying index. Custom application-specific integrated circuit demand directly impacts Broadcom revenue momentum. Together, these top 3 holdings represent 37% of the underlying benchmark exposure. Short-term downside in these foundational hardware giants translates into amplified daily pops for SOXS. However, mathematical compounding creates a structural trap for swing traders. Unfavorable sideways volatility continuously erodes net asset value over time. Holding this tactical trading instrument across multiple sessions converts routine market noise into permanent capital destruction. Daily leverage reset mechanics will punish anyone misusing this product. Open the hood on SOXS. The largest single dragging. MU at -5.8%, carrying 5.2% of the fund. Direxion Funds provides no reported assets under management or expense ratio data for this vehicle. Without published fee data, evaluating cost efficiency against real performance requires looking strictly at net returns. The fund's underlying design targets exposure through NVIDIA at 20.8% and Taiwan Semiconductor at 9.6%. Broadcom takes 6.6%, Advanced Micro Devices holds 5.7%, and Micron Technology claims 5.2%. The top 5 holdings command 48% of total fund concentration. Marketing claims of broad sector diversification crumble under this heavy concentration. Investors are taking an aggressive 3x short bet on a small cluster of mega-cap semiconductor companies. Looking at benchmark peers over 1 month, SOXS lagged the Invesco QQQ ETF by 11.2 percentage points. While QQQ gained 3.5% over 30 days, SOXS suffered severe downside momentum. Long-term performance metrics demonstrate catastrophic value decay. Year-to-date returns stand at negative 91.2%. The 3-year average annual return sits at negative 86.2%. This collapse aligns perfectly with the mechanics of a daily reset inverse product during sustained semiconductor rallies. It represents mathematical reality rather than operational failure. The fund's RSI sits at 64.0 in neutral territory. Broader market sentiment currently registers greed at 73. The lab's verdict is definitive. SOXS provides an efficient structure for single-day tactical short trades. However, it remains an untenable vehicle for holding capital over extended periods. SOXS is trading at a 7.855% premium to NAV. That's not a rounding error. That's retail panic bidding up a 3x leveraged inverse semiconductor ETF while the underlying index is already down 30% year-to-date. The narrative says we're in a trade war with Canada. Fine. But SOXS doesn't own Canadian fabs. Those chips are the only thing keeping AI training clusters from melting down. The narrative is missing the hardware reality. The trade war isn't the story. The insatiable demand for leading-edge silicon is. Volume flow is neutral, 0.88x 5-day over 20-day. No institutional stampede here. This is retail chasing the bounce in a fund that's lost 91% YTD. RSI at 64, price above both the 20 and 50-day moving averages. Momentum is pointing up, but only because the short-term squeeze is squeezing the last drops out of a structurally broken instrument. The fund's own narrative calls it trading inverse equity. That's PR code for this is a tactical vehicle, not an investment. The lab agrees. When the premium to NAV is this wide, the only thing holding the price up is retail FOMO, not fundamentals. SOXS is a narrative trade, and the narrative is running on fumes. Before the verdict on SOXS, the engineer's warning. 3 times daily does not mean 3 times monthly. A 10% up day followed by 10% down leaves the base index at -1%, but SOXS at -9. That's volatility decay. Short-term tactical only. Know your exit before you enter. The durable case for SOXS relies on geopolitical pressure and hardware trade restrictions. Strict United States export bans on advanced artificial intelligence chips to China directly slash sales for major producers. Additionally, new tariff threats target global semiconductor supply chains. NVIDIA and Taiwan Semiconductor combined represent 30.4% of the underlying benchmark. Consequently, concentrated export headwinds directly fuel tactical inverse pops for this instrument. Macro interest rates sit at 3.63%, while annual consumer price inflation reads 0.6%. The primary risk to this downside thesis stems from continuous hyperscaler capital expenditure expansion. Surging microchip procurement budgets will drive underlying semiconductor stock rallies, triggering severe losses in SOXS. On the evidence watch, track 2 specific fund structure signals. First, monitor top 2 holding concentration at 30.4%. High concentration amplifies single stock headline shocks across daily reset cycles. Second, track net asset value decay alongside the technical relative strength index reading of 64.0. Persistent leverage reset drag erodes fund capital during non-trending market conditions. Top signal, SOXS data blackout. No transparency, no trade. Is Direxion Semi Bear 3x ETFs moat strengthening or eroding? Let's hear your evidence. This isn't financial advice. We're here to dissect the hardware, not sell the hype. Markets change, yields shift, and past moves never guarantee. Do your own research before any trade. Hit subscribe. We decode the die sizes Wall Street ignores. The lab's signing off. Stay sharp.